Good morning, folks. This is Almus Market Mornings, where we bring to you the latest updates from the financial markets. Inflation is a very sensitive topic as it's perceived as a covert tax on our earnings. There's been great debate on whether tariffs are inflationary. The Fed has taken a more cautious stance, and President Trump has not minced his words on what he feels about that. The US CPI was released yesterday, which showed some acceleration in inflation. This data is being released by the same organization, the Bureau of Labor Statistics, which was under fire for its revisions in labor market data. Globally, we are also observing an interesting phenomena. The 30-year German and French yields are at cycle highs. They rallied about 8 to 10 basis points yesterday. Indian inflation print was at a 8-year low of 1.55% in July 2025, below market consensus at 1.75%. Good morning, JK. We have had an interesting inflation print. What is your reading on whether tariff price pressures are seeping through?
Good morning, Swaraj. No, I think this is the fourth report that we are seeing from the time the inflation numbers, sorry, the tariffs have been in play, and we are yet to see any major jump in the price pressures in the CPI data so far. Yes, they have been a bit higher than last month, but well within the expectation, except the core number, which was at 3.1% for year on year. And within the details, so the goods price inflation have been subdued, whereas the services price like airfares and the used houses are actually higher. Otherwise, inflation is well within the expectations, and maybe what's happening is that the um, retail retailers are not passing on the full impact of the higher cost that they are paying for import where the tariffs have been imposed, and it may be some time before they actually pass on, and it can be a gradual process. No, the this could be because of fear of losing business, and they've also stocked up ahead of the tariffs, and definitely 15 to 25% tariff on a huge amount of imported goods into the US cannot be without cost for someone, and surely no, all the companies are not going to absorb the whole of it. Therefore, I do expect eventual reflection of the price pressures in the tariffs. However, now the Fed's job is still not easy, because while they also think, at least the majority of them, that the tariff-related inflation will show up in the coming months. The economy has also shown some deterioration, particularly in the job market. So, what kind of balancing act that they will do in the coming months? Although, the CME's Fed Watch tool now shows rate cut expectation in February at nearly 95%, and for full year, near 50% expectation of three cuts that is being priced. Now, it's not only the inflation number that is, influencing the market's thinking, but also various official statements. For instance, the Treasury Secretary yesterday said that Fed should think about a 50 basis point cut in interest rates in September. In an interview that he was saying, one of the most outrageous statements from Trump was that a lawsuit being considered against the Fed Powell. I mean, this is inconceivable. But market does not totally ignore these statements. I mean, Stephen Miran, who is going to be new Fed nominee, is also said that the Fed's independence should be maintained. In the meantime, the talk has also gaining ground that former Fed St. Louis Fed President James Bullard may be one of the hot candidate for replacing James, sorry, Jerome Powell, and that he also made a statement that if we can protect the value of the dollar, that will give us a lower interest rates over time. And if we aim for low and stable inflation and respect the independence of the institution and the federal, we started to make statements. So I think these are also the statements that the market was looking at, and in a nutshell, we can say that it's not only the inflation number that is going to guide the policy, but also the overwhelming, or rather increasing number of doves on the Fed board that is possibly likely to influence the rates. And of course, we will see the uh, data from the economy. We'll have more evidence of how the economy is doing in this week. Hard numbers like PPI, more inflation data, then retail sales, industrial production. These are numbers that could, give more insight into the economy. And of course, as you said, rightly pointed out, the Bureau of Labor Statistics, which was under fire for the revision in the labor data of previous months, has also published the CPI data. One doesn't want to think that there could be any revision upwards in the CPI numbers. So. It's not everything very straightforward, but on balance, I think market's expectation of a rate cut in September may perhaps be realized, but may not be 50 basis points as Treasury Secretary is hoping for. We also had the inflation number from India, which hit 8-year low at 1.55%. Market was expecting 1.76%. Actually, we are seeing a disinflation in food prices. That's led to the inflation being lower. And of course, one should also look at the fact that month-on-month inflation was actually higher at 0.69%, and this is not probably going to lead another rate cut in the next meeting. Although this year we could have another rate cut if the inflation continues to be lower than the expectation. But what I feel is food is disinflation may not sustain, particularly as we enter into the festival season. Uh, as already mentioned earlier, base effect has been favorable for lower inflation, which can actually change in the coming months. Then RBI themselves have projected for Q3 at 3.1% and Q4 at 4.4%. So all in all, the year-on-year inflation is not going to stay at this level. It is definitely going to move higher, and that will be something that RBI will looking at rather than the current data when deciding their policy. And as often repeated by us, they have already front-loaded the rate cuts in the earlier month, and they would like to wait and see the transmission mechanism of the easing that they have done so far before they take any further action. And also, they would like to see the impact of tariff, and sanctions that India is currently facing before they take a call on the economy and what kind of impact it would have on the GDP. So Indian inflation is not really material as far as the monetary policy is concerned, but yes, in the medium term, or rather by the end of the years, we could have some more easing prospects if the inflation does not reverse sharply. Markets have taken the inflation number from US, quite sedately. The yields in the US, particularly in the longer end, were higher, more due to the influence of higher UK and European yields. UK yields went up after a stronger than expected employment data. And of course, Europe has been seeing their yields rise because of the prospect of huge fiscal spending that is in the pipeline. And however, the short-term yield in the US were somewhat lower. Stock markets hit a new high for S&P and Nasdaq yesterday. That's again taking hard from the lower than expected inflation numbers. And also, data shows that the US stock markets received the largest ever inflow last month. One of the factors behind the market's rally as well. As far as the dollar is concerned, while we are seeing consolidation, but it seems to still have quite a bit of negative bias for the dollar, because whichever way you see, if it is a rate cut, the yield coming down could be a factor to push the dollar down. Or if there is no rate cut, still we are seeing higher rates leading to slower growth, and perhaps the structural issues of debt and deficit will still be at play. So all the best that we can hope for the dollar is to have some more consolidation. Eventual move lower can be expected below 96 for the dollar index, and of course towards 1.20 for the euro, which is quite likely in this year. And gold has also seen some correction, but uh, consolidating well ahead of the support at 3310. And I think we need to get more indications on the inflation. Don't forget that we also have next week a very important event in the Jackson Hole Symposium, annual symposium, where central bankers meet, and important policy outlooks, or not rather than outlook, policy papers are discussed, and long-term policy approaches are also likely to be discussed in these meetings. So Powell will use this forum perhaps for indicating the Fed's approach in the coming months, and that is something that we look forward to after this week. Thank you.
Thank you, JK. And it seems the fight for inflation, the concerns with inflation is not really out of the picture. There is some sort of rise in prices, but as JK mentioned, we are not seeing the full pass-through of tariff-related price hikes. Maybe the current inventory and the gradual passing of tariff prices may be one of the reasons why the price pressures have not increased to a very large extent. But Fed's job is not easy. Fed thinks the rises in price will be showing, but underlying economy also remains weak, which causes some concern. Treasury Secretary Bessent has been saying that Fed should be cutting 50 basis point in September. President Trump, meanwhile, is planning a lawsuit against Chair Powell for the Federal Reserve renovations. We have got the PPI, retail sales, and the industrial productions up ahead, which will give us further insights into how the US economy is doing. Indian inflation, as JK mentioned, hit a 8-year low, primarily because of the food inflation, which has been reducing. But remember that RBI itself is projecting higher inflation starting Q3 and Q4, and we have got a festival season up ahead. So the food prices are anyway volatile, and they may see some sort of a reversal. That's it from us today. Thank you for listening. We'll catch up tomorrow with the fresh round of updates.